Hey everybody, welcome back. I'm Rob Booker. Nice to see you here. I'm the best-selling author of Adventures of a Currency Trader, former FX fund manager, and I'm your instructor for this FX Trading 101 set of lessons. We want to thank our sponsor, Forest Park FX, for helping us out and making these lessons possible. In this lesson, I want to talk to you about what is a currency pair. Okay, currency pair is made up of two parts. One is the primary currency, always on the left, and one is the other currency on the right. These sometimes have names like quote currency and other currency, and there's all kinds of names thrown around. But the most important thing you need to know is that all currency pair quotations are first country on the left, second country on the right, or first currency on the left, second on the right. Now, this is the quote for the Euro USD. You're also going to see quotes like the US dollar, Japanese yen. These are what most people would refer to, these two, as majors. So you're going to hear people toss around this term, major currency pairs. This usually involves the major currencies of the world. Things like the British pound, which is GBP, the Japanese yen, JPY, or the euro, EUR, or the US dollar, USD, the Australian dollar, AUD. These are the majors. You could toss in there New Zealand, the Kiwi. And each of these has its own special name. The British pound is often referred to as cable because an undersea cable connected Great Britain to the United States and was used for trading purposes back in the days of J.P. Morgan in the early 1900s. The US dollar does the greenback, right? The New Zealand dollar is often referred to as the Kiwi. The Australian dollar is often referred to as the Aussie. The Canadian dollar, which I saved for last, is often referred to as the loonie, because that was a bird on the face of one of the coins, I believe. So those are currency pairs, and you're going to see them inside of your trading platform quoted along the side here. But in addition to all these majors, which Euro, US dollar, Japanese yen, the British pound, US dollar, and so forth, you're also going to see pretty wild currencies. Like you're going to see letters like PLN for the Polish currency, and we don't generally trade that. You might see something like CNH, which would refer to the Chinese yuan. We're not going to trade that either, but your broker, you might see that one. You might see the Mexican peso, MXN, which is the wildest, greatest, most fun currency to trade in the world. But in summary, a currency pair is a combination of one currency against another. Now, if you buy this currency pair, the Euro US dollar, if you buy this, you are buying euros, and then you are selling dollars. If you buy the Euro US dollar, you're believing that the euro is going to go up and the dollar is going to go down. Remember, as the euro dollar travels upward, the euro is strengthening and the dollar is weakening. Maybe because of economic news, maybe because a big merger and acquisitions order went through, or something along those lines. If, on the other hand, let's draw this and change this around a little bit. So let's say that you instead believe that the euro is going to be weak and the dollar is going to be strong. It will always be quoted like this. You would sell this currency pair, betting that the euro dollar is going to go down. Now you can click the sell button right inside your trading platform anytime you want. You can click here and I can do an order. I can sell the euro right there. I just sold the euro US dollar even though I don't own it. That means I'm betting that it's going to go down. That's all you're doing. You're just making a bet that it's going to go down. And that's perfectly fine. You don't need to borrow shares or any of that craziness in the world of equities trading. And when you sell the euro US dollar, you're making a bet that the euro is going to fall and the US dollar is going to rise. So you are buying euros, you're selling euros and you're buying US dollars. As the euro US dollar falls, the euro is weakening and the dollar is strengthening. In other words, this is always a competition between two currencies, one that's stronger, one that's weaker. And there's always going to be an ongoing war between those two. And all currency trading is a short-term or long-term bet that a currency pair, or one against the other, is either going to rise or fall over a short period of time or over a longer period of time. So as we wrap things up here, I just want you to remember, when you look inside of your broker or your dealer's trading platform, you're going to see a big list of quotes and currency pairs. And that's going to be all the available pairs to trade. And it's always a competition between one currency and another. And if you're buying a currency pair, you're betting that one country's currency or nation or block is going to go up and the other is going to go down. I want to thank our sponsor, Forest Park FX, for making these videos possible. If you're interested in FX trading, contact Forest Park FX to receive cashback rebates on every trade you place. You can go to forestparkfx.com. Remember that Forex trading carries a significant risk of loss and is not suitable for all investors, and terms and conditions will apply. I'll see you in the next video.